Hi everyone, welcome to the Money Wisdom Podcast. Thank you for joining us, and today we are very honored and very happy to have my colleague as well as the founder, editor and everything of Investment Moats, Kyith. So Kyith is one of the, I would say, original blogger in the financial space. I think, Kyith, you started blogging since more than a decade ago.
Yeah, about 2005 like that.
Wow, 2005. That makes it, how many years? 18 years?
Almost 18 years.
My. Those people whom you have blogged with since 2005, how many of them are still around today?
I cannot remember.
But not many, not many, right?
Not many. Most of them are more passive nowadays. Right?
Okay. So, I mean, the story of Kyith with Providend, sometimes I do get people asking me, how on earth, did you get Kyith to join us? So, I mean, Kyith's background, for those of us who do not know, Kyith was from the IT industry, and I still read his blog. And those of us who has read his blog or still reading his blog, you will know that Kyith's blog is very different from most of the financial blogs out there. It is very long, it is very detailed, it is technical, and it's really for people who are serious about not just doing investments, but wealth planning. And many of the readers have benefited, and so have I. So some years back, I thought I should just ask Kyith to see whether he wants to join us. Since he likes to do this, and is obviously good at these things instead of wasting his talent in the IT industry. So I asked Kyith whether he wants to join us, and he said yes. And that's how Kyith ended up with Providend as a senior solutions specialist, right? But he continues to write his blog and bless many of his readers. So Kyith, once again, welcome to the Money Wisdom Podcast.
Hey, Chris, thanks for the invite. And thanks for recruiting me as well.
Okay, I'm glad you say that. You don't have to say that as a start. The first question that I have for you is, can you share some of the money beliefs you grew up with? I'm not sure whether you have written about this, and I'm not sure how many of your readers know about your background, the family that you come from. You obviously didn't come from a very well-to-do family. And as you grew up, I'm sure your late parents would have imparted to you, and you have picked up along the way some money beliefs. Maybe you'd like to share that with all of us.
Okay, I'm going to try to make this as succinct as possible because we don't want to go into all the backstories in the podcast. So my dad came from China. Came from China a long time ago.
Your dad?
Yeah.
Oh, not even your grandfather. Your father came from China.
Yeah. So he came, they have three brothers. So my father is the youngest, so he came with the second oldest brother, come over to Singapore, leaving the elders over there. Usually that's the case. So if you look at my hairstyle, which is like a little bit like a Chicken Little hairstyle, right? That's how we still have a photo of them coming over, and that's the same hairstyle.
Your hairstyle wasn't like that when you were younger.
No, confirm not.
Yeah, quite different. So now you adjusted your hairstyle to reflect your ancestors.
Yeah, it's a bit about that. It's a bit about that.
Okay, so sorry I interrupted you. So your father came from, which part of China?
Came from, I think, the Teochew area, the Shantou area.
Oh, I see. So he's a Teochew.
Yes, he's a Teochew.
And you are Teochew.
Yeah, I'm Teochew.
And you can't speak Teochew.
I cannot speak Teochew.
Oh my, that's terrible.
Yeah.
That's terrible. Okay, so your father came from China. Okay, and brought along, I suppose, his money beliefs and all that. Yeah, carry on, share with us.
Not so much. Like what our money beliefs is usually like what, as a kid, what we observe from our parents, and along the way, whether there's any traumatic experience that gives us certain lessons that sticks with us for a long time. So my dad came from China. Eventually, his families, I think, settled somewhere in Ang Mo Kio. And so they do a lot of pig farmings and all that. Eventually, he became, I think, a contractor.
So contractor, as in those renovation contractor?
Renovation contractor. So that was probably in maybe the 1980s or so, where I'm a 1980s kid. So that's where I became conscious about most of the things that is happening. I would like to tell people that I only remember things 5 years and onwards. Anything before 5 years, I don't remember.
5 years, meaning to say, go back 5 years, you can remember.
Those things like 4 years old, 3 years old, I cannot remember.
Oh, I see.
Going on.
Okay.
Yeah.
Okay, but I mean contractor, right? Renovation contractor. A lot of us have this idea that renovation contractor, they actually do quite well financially. They actually make quite a bit of money. That's not the case with your father.
No, that's not the case.
And did he do this, all the way? He was a contractor throughout his life until, of course, he couldn't and he retired.
I think they try to pivot. They try to pivot to make ends meet. So I think along the way they were like doing all those kind of like pig farming and all those things, and obviously I think that don't work out in when it transits to more of the modern days. So even contracting is not like he's the main contractor. Usually how it works is
he's a subcon.
He's a subcon. There's a main con, and then they put in the parcels of this, and then they give them. So thankfully for a large part of his career as a contractor, right, there are jobs around. So then my mom is born in Singapore. So my grandfather and my grandmother on the side, they are more of those food sellers. So I remember that my grandma, she sells mee jiam kueh lah.
Oh.
But we don't know how to make mee jiam kueh nowadays.
You didn't pick up anything from your grandparents, and you didn't pick up anything from your parents. You don't know how to speak Teochew, and you don't know how to make pancakes.
Yes, that's a good way to embarrass me on the podcast.
So what did you pick up from them? At least you must pick up something from them about the way they manage money. I'm sure they were very thrifty because they were poor, right?
For what I remember, right, like when the two of them got married, and when the two of them, my dad and my mom got married, right, they eventually moved into a 3-room flat in Yishun. So that cost like about $29,000. $29,000 looks like very little right now, but back then I think
it's big money.
It's big money for them, for my mom and my dad. And so inside our house, right, we don't have anything. Okay, so I can still vaguely remember that we don't have anything, and then everything is like piece by piece. So it's very different from a lot of my peers today, where everything where it comes to renovation, you need a sum of money for that, and furnishing, everything needs to put together. So throughout my younger years, right, everything was tight. I wouldn't say that I go hungry or something, but everything was tight. And when everything is tight, right, it kind of drives home the point that money, you have to be more careful.
Be careful. Yeah.
And I think throughout that period, it was quite okay until I think maybe somewhere, I think during 1997, 1998, we decided to, I think my mom and dad decided to get a flat in Sengkang area.
Sort of like a BTO.
BTO.
Those days wasn't
before
called BTO.
Before BTO.
Yeah, but it's a brand new flat.
Yeah.
So they make some money in the switch, I suppose.
I think they didn't, because during that period, like we sold somewhere in 1997, like about that 29,000 house, we sold it for 137,000.
Okay.
So when we bought the place, the 5-room one, it cost $265,000.
Okay.
So definitely you have to top up, and we took a loan. I think my parents took a loan of about $67,000. So because my dad is a contractor, right, so he took some time to actually renovate his place. But after he renovated his place, right, after that, right, the whole industry just go to shit. So basically there's no job anymore. And from that point onwards, he didn't have a job all this while.
And then you were still young?
I was around JC2. I was around JC2. So I almost finishing JC2. So I went to the army. Not sign on, but like a normal NS. And so
with your brother, your brother was older.
My brother is 1 year older.
Okay.
So I look at the situation like that, and I was like, I think maybe I need to help out a bit. So from that point onwards, like, I don't take any pocket money from them.
From NS days?
From NS days. NS, you still have allowance. The tough one was actually like university, because we didn't get a loan, we didn't get a tuition loan. They still pay for it. But I know kind of think that money is tight. So you just try to figure out your own. You take part-time jobs, do those kind of like night jobs, 3 days night jobs. until very tired, but you still go to study. So everything like kind of the main thing I think it rubs off this whole experience is that when you're trying to control your money, right, it tends to be like very tight. So you kind of know that actually you comes from instead that money from an abundance kind of mindset, but it's more like a thrifty kind of mindset. So it rubs off on me even today. You look at my thinking, and a lot of my readers will kind of like they will detect like majority of my plans or how I write, you can detect a lot of conservatism, whether it's investing and whether in the planning advice that I give people.
So I mean, you said you did part-time jobs. So you really started working during your university days. What kind of jobs did you do?
Wow, okay. I try to get tuition gigs, but cannot. Actually, I also have reservations about that because
sometimes I want to give tuition, people say 不要害人.
Correct. Right. But you got to start somewhere, but that opportunity didn't come. So I think I managed to link up with this job agency called Kyith Services. Back then, I think if you want to find jobs, right, you go to International Plaza,
right,
which is not too far away from here. So this agent, right, is focused on the financial services. So there's a lot of those kind of odd jobs that you require. So I did a 3-day, 12-hour shift about like moving, like printing papers. Every time, you know that back in those days, right, if you have credit card statements, right, they'll print it out and then you'll receive the credit card statements, how much you owe, right? Every month end, right, there's a printer that you need to print one batch. So I am one of those people that did those jobs.
So those were one of the jobs. Any like hard labor jobs or anything?
That one is hard labor already. Each box is like 20 kg already.
And usually at night, right?
Yeah, usually
because you have to study in the university during the daytime.
But it's kind of nice because you just do 3 days and then the rest is okay. But the tough thing is I think I made like about $220
a month.
For that period. Okay. So that one,
it's not a lot, but then for uni student, if you are very, very thrifty, you probably scrape through, I suppose.
Yeah.
So those were the really tough days, and I guess it has helped you to, in a way, become who you are today, because we all know you are very thrifty, right? So I suppose when your dad first had that house at Ang Mo Kio and there was nothing, he had to find ways to fill it up with furnitures. He probably got a lot of second-hand stuff. He probably got things and then he repaired it, things like that.
Yeah.
Right? That's why he had to do that, right?
We slap a lot of things together. Like you have those woods and you learn to make like chairs or tables out of it. The plants outside, they need something to stand on. Like he built it up. That one was I remember was impressive because that one is really woodworking. And majority I think he learned himself. So
But so in that sense, okay, you did pick up something from your parents, right? Because for those of us in the office, we can see how you recycle things.
Yeah.
Right? A lot of things that most of us would have just thrown it away. You manage to recycle them and you can still use it. You share your expenses very freely on your blog. I don't know how you survive with $21,000 a year, right? So obviously you picked up that thriftiness from your parents,
Yeah.
Right? So that's one of your money values, right? Being thrifty, being very prudent, and obviously you are a lot better off right now. You're much better off than your parents, definitely.
Yes.
People who read your blog will know that you became financially independent at the age of 38.
38, 39.
Right? Yeah, see, I do read. So, so you have enough money, but you're still very, very thrifty today.
Yeah.
So would you say that these things somehow, it's not that you just picked up from them, but because of circumstances in life, you became who you are today?
Yeah, it's some of these habits or I would say pivotal experience when you're young, right? You don't shake off them so easy. Like right now, like I don't have to buy all these secondhand things. Like we know there's a lot of shop house over here. Sometimes I do still wander into the back alleys, right, to see what what is the nice things behind. Don't have to do that. But it's just a muscle thing. And
muscle memory.
Yeah, it's a muscle memory. So I think one of the key things that rub off a lot is that the idea that you don't want to go back to that situation anymore.
Yeah.
Okay, it's not that bad of a situation. So even in my planning, right, it's like the model that I use, right, they tend to lean more closer to the more conservative, and even more so than what we use in Providend itself.
Yeah.
Yeah.
Did your parents at that time knew that you were financially independent at 38? Did you tell them?
No.
They didn't know. Why didn't you tell them? They would be very proud and very happy.
For people that generation, right, they don't understand so much these kind of things.
Are you sure 38 years old, you don't need to work already? Your parents probably think you are crazy.
Yeah, they probably think so.
Yeah, because they never understand. I mean, our parents, they are so poor, they may never be able to understand why at 38, 40 years old, they don't need to work. And then you tell them that your money is coming from dividends, they will be thinking that you are gambling.
Yes. They prefer you to tell them that you have a good job, right? But yet at the same time, you have good work-life balance.
Okay. Fast forward, right? I mean, all these things that you have picked up, you have learned, you have seen how your family suffered through really poverty and then still survived.
Yeah.
Are you more confident about the way you manage your money today?
I think so. I'd like to believe so. I think my readers as well, because like if I spend like 18 years doing this kind of thing and I'm still not confident, right? Then what chances do they have to be confident? Yeah.
Sometimes, I do meet clients, right, whom, because of their past experiences, I mean, today they are better off, but they have gone through experiences like what you have shared.
Yeah.
They don't actually know how to spend money.
Yeah.
Right? They don't know how to enjoy life anymore.
Yeah.
They are so afraid of spending money. So whilst you say that you are confident in the way you manage your money, okay, and that confidence comes from your investment knowledge, and you've been doing a good job at your own investment portfolio and all that, right? But are you confident and will you spend money on yourself?
I think you all know the answer lah, because you all see how I spend, and it's a typical struggle that a lot of people similar to myself have lah.
Yeah.
You have to venture out step by step, so that you become comfortable with it. You have to sometimes some of these things tell yourself, hey, don't think so much, just spend lah. And I think the opposite is also true. Someone that is like always spending money, and then you want them to turn around.
It's tough lah.
It's tough. This one is also tough because like what's the point of saving so much money when?
Yeah, exactly. Right. So you obviously have a withdrawal rate that you draw out every month or every year to spend. I suspect even the amount that you can spend, you don't spend that amount. You spend below that amount.
No, actually, I spend more than that.
You spend more than your draw. Oh, that's good news.
I spend more than that. So
but it's only recent or it has always been like that.
In a sense, like I don't constrain my spending. Like if you're wondering what goes on in my head, right? A lot of time is like actually like thinking whether this item whether it's worth it or not. Like if let's say I go out with you guys or my colleagues, right, celebrate those kind of things, right? It's like it's definitely not worth it, the amount value, but is spending time with people you want to spend your life with, right? Then you just spend it lah. I wouldn't say that it's always been like that, because when I was like building up my wealth, you have to like make sacrifices. Some of these things you will inside your head you will say, okay, don't choose those that is like the more expensive ones, or don't go for all those kind of events. Last time you do put a constraint on that. Nowadays, not so much lah.
So I picked up something you said, which is quite important, I guess, because you said something like when you spend on those things, maybe food, the amount of money you pay for the food may not be worth it. Like, I cook, right? And so now if I want to order a plate of vegetable and they charge me like $8 to $10, then I'm like thinking, oh, $8 to $10. Yeah. I can cook this thing in like 10 minutes. I probably spend less than $3. Yeah. Right? So like it's a lot of difference, and it's really not worth it to spend the money on that kind of food. It's not value for money. But you said that you still spend it because what you value is the time that you can spend eating out with the people that matters to you. So you put value into people rather than the food.
So it's a conscious evaluation about what is valuable, what is important to you. But it's also sometimes you have to be careful not to lie to yourself. Sometimes it's like you're over justifying some of these things. Is it that you're trying to force yourself to be thrifty again? Or is it you shouldn't self-rationalize so much?
So you are thrifty, but you're not stingy. So what do you tell people? I mean, how would you, maybe it's good that you tell people, because I know a lot of us, right, when we read your blogs and we see the person that you are, right, we probably think like, wow, he doesn't spend money at all, right? But you have just shared something which I thought is important for the listeners. What would you tell people whom they are like you, they are very, very thrifty. They are very unwilling to spend. Maybe because of similar life circumstances, life was tough, and they are very unwilling to spend. They are spend and they are saving and saving and saving. What would you tell these people?
My structural brain will explain this way. If you really feel that like you have enough money already, like really enough already, right? Then you should consciously like learn to actually spend. Okay? But the challenge is always like technically how much is actually enough. So for a lot of people, I think they're of the same mindset. If you know that your money cannot spend finish, most likely people will start to slowly learn to spend already. But for a lot of people, they don't know how to figure out how much is enough. To them, it's always like not enough. Or throughout their working careers, for about 15, 20, 25 years, they have been in accumulation mode. So it's very habitual already. So this is the part where you can see the value of someone that is sophisticated in this area to help them figure out, it's like your money cannot finish one. Okay, so it's important to know that and to understand why the planner or your friends say like that. So once you are able to connect with it already, then you know that like life is not just about saving money.
Thanks for the plug. I mean, that's someone who is able to help is obviously us. I mean, that's what we do for our clients.
You
right?
can infer that.
When they come, what we want to do is really give them that clarity, that whether they have enough and how much they can spend. Right. I know you don't want to say exactly who, but it's us. Okay, because a lot of times, I mean, one of the things I've agreed with Kyith when he joined us is, Kyith, you don't have to write good things about Providend on your blog. I don't expect you to do advertisement for us because that's your blog, and I always said that you have your independent view. But I'll use this opportunity to say that that's us. You know, we help our clients to have financial clarity. Now, tell us. I mean, the Kyith that has written so many blog posts since 2005 and seemingly know everything about finance and now is working with Providend. Have you made poor money decisions?
Oh, definitely so.
Okay, share with us some of them.
There is the poor ones. If you're investing long enough, managing your own portfolios, you definitely have poor investments. I don't have so much poor investments. But I have a lot of investments that like you miss out. Like say for example, like one stock you buy called AEM went up 100%. So you earn $20,000, right? Seems nice, but fundamentally there is justification why I would mistrust a company based on the fundamentals that it can continue. So eventually this one continued to climb. So I could have made 400,000 from just one stock.
So I just want to clarify that you said that you don't have a lot of poor investments, meaning to say that for those investments that you have put money into, most of them turn out okay. But your poor money decisions comes from missing out good investment opportunities. Okay. Any other kind of poor money decisions, like you shouldn't have spent on things that you have spent and you regretted those decisions? Any of those things like that?
I think most of these mistakes, eventually if you learn something from it, I think I think that's the most important thing. That's definitely so like I venture, of course, into the crypto space. Like I made money, but I also lost money. So
net, how was it?
Net, I think it's about zero.
Zero.
I think I made 70,000 at some point.
Zero means a break even.
Break even.
That's not too bad.
That's not too bad lah. But inside your head is always that as a learned person, you always think you judge yourself based on the decisions that you make, the quality of your decisions, and some of these is not what you were expecting. And when you felt that some of these decisions you can prevent, then you feel the pain of it lah.
Yeah. So in making these decisions, right? I mean, do you even have an advisor to speak to, someone you trust to speak to?
Not really.
To help you make those decisions. So you are a DIY guy. You don't speak to anyone. At all. But most
bloggers are like that.
Yeah, but now that you have with Providend, you have colleagues, right?
Yes.
Do you bounce off those thoughts and those decisions with the people whom you trust in the firm?
Yeah. This is one aspect about working in Providend that I really enjoy. Like last time, some of these things you discuss with your colleagues, my ex-colleagues, they give me a certain perspective about it. Now it's different because most of them, they understand this kind of thing. So it's a different, it's a richer perspective about it.
Yeah. So I mean, for a very experienced blogger like you, and you've been there, you have gone out there, you know what the industry is like. You write about it. So it's good actually to hear from you. What would you consider to be good advice?
I think good advice is to make sure that there needs to be a certain level of sophistication. It's like if you compare where you are, like your level where you are, and the advice that you're taking, it should be like at least one level higher or a few levels higher. So that's where you can value add to your problems or things that you're struggling with. And the second aspect is it has to be personal enough. It's like it has to be tailored to your own situations. Someone can give you general advice, but it's not as strong as if it's more personal.
If let's say today you need advice, would you pay for it? I'm saying you need because obviously you have been doing a lot of DIY stuff on your own.
Yeah. Right?
But now you need good advice. Would you pay for it?
We're talking about financial advice, right?
Generally, wealth advice.
Wealth advice.
It doesn't have to be investments. It can be other things. I know you just paid for, and you wrote about it anyway, right? You paid a lawyer to do the probate.
Yeah.
And even though you could have trudged along and do it on your own, you decided, okay, forget it. I'll just pay the lawyers to do it, right?
Yeah.
So obviously you will pay for advice.
Yeah. Yeah. I think I did discuss this with some of our colleagues, especially for people like ourselves, that is in terms of investments, we're sophisticated. We probably understand like investments more than other people. And do we really need advice or not? I think that some of the conclusions that we get is that we need it in other areas. There's an assortment of things outside of investments, right? That we one day we will need them. And not just this portion, but also the investment portion. A lot of us don't want to keep doing this. We also cannot keep doing this.
At some stage, when you're old, right? You're 60, 70, you probably don't want to do all these things on your own. Yeah.
This is something that I think a lot of people underestimate, because for large part, I've been a DIY investor, which means that I'm a portfolio manager and a financial planner added together. So as a portfolio manager, there's a lot of investment things that you need to think about in order to actually create a sound portfolio so that it will grow over time. That's a job, and people underplay the degree of effort that is actually required. So at a certain point, I think I also pivoted, because I used to be known more as a dividend investor.
That's right. Yeah.
So as a dividend investor, what you do is that you curate, let's say, a universe of opportunity sets, right? You try to filter those stocks that give dividends that fits a certain profile that is able to give sustainable dividends. And then you buy them. You hope to concentrate on them so that to make your efforts worth it, right? And then there's an ongoing effort to keep curating, to see whether, to make sure that nothing bad happens to them.
The company won't go bankrupt. It will continue to pay you the dividends.
To make sure that the dividends are sustainable.
And it's a lot of work.
It's a lot of work. And I think a lot of people like underplay that, because a lot of people, what they do is that, for us, we build up our knowledge over the years. And then sometimes we tell people who wants to embark on this path, you can DIY, you can pick out on these things. But they didn't realize that they do all these things right over the years. They learn all this over the years.
It's not an overnight thing.
It's not overnight things. So in a certain sense, there is a bit of overselling there. So at a certain point, then I realized that I really don't like to maintain an opportunity set on an ongoing basis.
What was the problem? Tiring? No time?
Tiring now. Like, work in Providend is not not always Singnang work. So that's
Singnang, by the way, means easy.
Yeah. Sorry.
That's our Singapore lingo. I think it's Malay. So it's not always easy, and you don't have the luxury of.
I don't have the luxury, but it's also like, one of the big things is that, like, people don't talk about, right, is that there is a lot of, inside some of our personal chats with some of my investing friends, there is a lot of parts whenever let's say this stock goes down, right, it's either an opportunity to buy more, or that something bad is happening, okay? And it's most often not always very clear cut. So there's a lot of this kind of discussion, like which is it? Which is it? And this is the part where what people teaching you outside, they don't tell you about it. And it can be very vexing, right, when you don't have the time and then you still need to think about all these things. And especially if I wish to run, let's say, a concentrated dividend portfolio, which means that these positions can be quite large, right? Then all of these things, it affects your judgment. So I decided at a certain point, right, there is taking risks, there is effort. Like, I don't want that piece of effort. Like, if I know that in order to get the returns, you need to take risks. You need to have a portfolio of different kind of risks. But I don't want to manage the risk at that level. I want to move one level higher, which requires less effort, and other people can do it for me.
So I think a lot of people, they may not understand that. So they read your blog, they see you doing all those things that you have been doing, and they don't realize that it takes a lot of hard work and time to be able to do it yourself. I mean, even for you who have been doing this for almost 2 decades, right? At some point, you realize that you want to simplify life a bit. So tell us a bit more. I mean, how has that changed? Right? You mentioned that now there's a change. How has that changed from a pure dividend investor curating a portfolio of securities to give you that income? How has that changed?
That transition, you mean? So at one point, I think I really sold off all my dividend stocks, and then I moved to exchange traded funds.
Okay.
UCITS exchange traded funds listed on the London Stock Exchange. So these are Irish domicile, right? They are more estate tax friendly.
Generally tax friendly.
Generally tax friendly. It also gives you a peace of mind, like you don't have to worry, if you drop dead today, right? Whether your heirs will actually be able to be heavily taxed on this or not. So, but it's a transition, because usually you look at each of these individual stocks, right? Their fluctuation is quite large. Now you look at ETF, it's very small. So there are these kind of nuances that you take time to actually get used to. But I think it's better. Buy
the dividend paying ETFs or no?
No, okay. I don't. So most of my ETFs are either style factor based, like multi-factor ETFs, or ETFs that is US small cap value.
which is quite close to what we do for our clients as well.
Yes.
So now it's a bit different because your income is not coming from the dividends. You are doing withdrawal, you're doing sell down when you need the income. So you buy a basket of ETFs, but I'm sure you still hold on to some securities, individual securities.
Very little.
Okay.
Yeah, very little until I think it's not worth considering.
So that's a huge change. And how do you feel? I mean, now you got more time to do other things, I suppose, and enjoy life a bit more.
I like the part about not having to worry about the portfolio management part. Like last time, if you have this kind of US commercial REITs that is like wondering about this turmoil, then you'll be wondering inside your head, hey, like how do you look at this? Is this a systemic risk problem? And then whether do you need to cut, or is this an opportunity? Can they survive? Do you need to put in more? Don't have to think about that anymore.
Okay. Yeah.
So you can imagine when you're kind of concentrated in, let's say you put 10% of your portfolio inside this, and if let's say my portfolio size is like about $1 million, right? That's $100,000. Whether you make the right decisions or not, right? It could sometimes impair your portfolio, but of course you can actually ramp it up as well, lah. So it's good to not think about it at that level, lah.
Okay. Yeah. Okay, so Kyith, I want to talk a little bit about your blog.
Okay, can.
Right, because you've been writing the blog since 2005, and along the way, you have in a way shaped your own philosophy.
Yeah.
Not just in terms of investments, but also in terms of personal financial planning.
Yeah.
Right. And when you joined Providend a couple of years ago, I'm sure there are some differences. Yeah. So how do you align with that? On one hand, you have certain convictions, your own belief in a way how things should be done. You write a lot about it, and then your readers read about it. And then on the other hand, you come to Providend, and here we are preaching a slightly different philosophy. How do you cope with that?
If I were to be truthful, right, there isn't a lot of misalignment.
Okay. Tell us more.
Like I always believe in, like, if we critically think about some of these things, like the audience, right? Some of those things, if they critically think about it and dig deeper inside, right, they will find quite rational way of actually looking at this personal finance, financial independence, and investment stuff. And that's how I arrived to a lot of these kind of investment and planning philosophy. And you realize that when you come into Providend, right, a lot of these things, they tend to be very, very aligned. So where it's different is because for Providend, right, we're trying to corporatize a lot of these plannings for our clients. So most of what we implement for the clients, right, they have to be well thought out already and can be implemented on a more wide scale level to all of our clients. So that cannot always be the case for everything, because like we're trying to plan great lives for our clients.
Yeah. So I hear what you are saying is that in general, the philosophies are similar.
Yeah.
It's just that the execution is a bit different because your own philosophy and your way of planning, you can do it for yourself as an individual, or people out there who reach your blog can probably do it on their own as an individual.
Yeah.
But when it comes to Providend as a firm, or for that matter, any firm out there is a need to institutionalize the practice, right? That the advice is the same, and therefore it is not easy to carry out things that you can individually do. Now, I know all that sounds very cloudy, so let me give an example, right? And correct me if I'm wrong.
Okay.
So in the area of investments, in your earlier days, you create a dividend income kind of portfolio.
Yeah.
And for that, you have to spend time picking the stocks, and then from time to time, you may have to rebalance the stocks.
That's right.
And it's easier as an individual for you to do that. You make that decision, you pick those stocks, you buy. And if you cannot buy, the order is not filled, you can wait tomorrow, you can buy again, or you can find another stocks to buy again easily.
Yeah.
But as a company, as an advisory firm like Providend, or again, for that matter, any company, it's going to be quite difficult to do that.
Yes.
For say 1,000 people.
Yes.
right? I mean, you want to buy a stock for 1,000 people and not all the orders are filled. And then now how? You got to queue another day, or you got to find another stock for someone else, and you end up having 1,000 people possibly with portfolios of different stocks. And when you want to rebalance the stocks, wow, it's going to be really cumbersome. And you're going to monitor now a lot more stocks. So it becomes very difficult for an advisory firm to carry that out.
Yeah.
Am I correct to say that?
For the investments part, we can say something like that.
Okay.
Yeah.
How about the wealth advisory part, or wealth planning, or the personal financial planning part? Is there an example you can give that as an individual you can do easily, but when it comes to an advisory firm, it is harder to execute on an institutionalized basis?
I think because for on an individual basis, you can be more personalized, meaning to say, like you will only need to worry about your own decision tree, like your own personal situation.
Right.
But as a firm, right, we cannot just imagine that our clients, right, is of this certain mix. We have to take care of, like, some of the clients are, I think, trying to retire at 35, 40 years old. Some is like 65, different backgrounds. Their financial resources are also different. The amount of bequests that their philosophy towards bequests and legacy plannings are different. And so we need to think more about the decision trees to actually pass down to our advisors, so that they have a clearer picture how to plan for a diverse group of clients. So say, for example, on a personal basis, right? I know my own situations very well. Like in a certain sense, one thing that I'm quite big at, right, is that whether you're ready for financial independence or not, a lot of these things, right, are driven by your reflection upon your expenses. Like how do you categorize your expenses into like two different piles? One portions, right, is the more the inflexible ones, and the other portion to be the more flexible ones. And so with that in mind, right, like I can actually broken up my portfolios to provide income into two different piles. So this is not say slightly different from Providend in a certain sense. Like, we have a retire well framework. It definitely can adapt to my kind of thinking. But in a certain sense, most of our clients, right, they come from a different kind of backgrounds. Most likely they have more resources. And at the first cut, right, we look at the expenses as a whole. We don't break it down this way to such a degree. So you can see here there's a difference in implementation already. Yeah.
So in that regard, right, should people just do it themselves because they can be more customized, they know themselves better? Is there a value in taking advice?
I think there is. Like, if we continue down this road, in a certain sense, like, it took me a while to actually like build up this knowledge that I have over time. I like to share with people, like, when I started down this journey about understanding about financial independence, some of my original ideas, right, today, right, when I look back, right, it looks quite naive. And like what is my model compared to now? So for a lot of people that they DIY, right, it might be the case that their initial ideas is also
obsolete.
Can say obsolete or that it's just not sound. So if certain firms are sophisticated enough, or certain financial planners are better than you in this area, then they can point out. Certain
firms like us.
Can say that. I don't want to oversell the portfolio.
You're always neutral. Even though you work for us, you are always neutral. So I stopped you to say, if certain firms are sophisticated enough, they probably can keep up, or the models that you use at the onset is already complex enough in solving their need. That's what you're trying to say.
Yeah.
So, I mean, for people who read your blogs, right, I mean, a lot of them, they often aspire to be like you, do it themselves. And so if they ultimately decide that they want to take advice, what would you say? What kind of adjustments do they need to make? Because they have been reading not just your stuff, they can be reading other individual blogger stuff, and then they have a certain idea how to do it. but they are going to an advisory firm. They feel that, okay, I need to give advice, right? I need to take advice, right? What should they prepare themselves?
I think my answers will be a struggle to some of these audience out there, because if you look at a landscape right now, right, like there's a reason why a lot of us like bloggers are DIY people, and a lot of people that they look up to us, they prefer to DIY in a certain sense. Like some of them, they went to their financial advisors to whether to build wealth or for retirement. They don't get good answers for it. So meaning to say, like, if you look at a landscape out there, to actually get good advice in this area that is sophisticated enough, yet at the same time, these are people that you trust, that has your best interest, right? There's not a lot. In this sense, there's a strong reasons to actually DIY and not ask for advice. And for those people who are seeking for advice, I think the first thing to seek is to make sure that these people are really sophisticated enough. They really know
these people
what
means
they're doing.
The clients themselves.
The clients need
and
to
consumer
make, say for example, if you're almost going to retire in maybe 6 or 7 years time, and you have to decide whether you are the conscientious people to actually dive deep into this, or you really don't want to dive deep into this. And if you're the latter, right, then you really have to like look out the landscape, right? Who actually does this best? Who has the sophistication for these kind of things?
Right.
Because I can tell you, outside there, a lot of people have a lot of weird models on let's say even retirement planning.
Right.
Yeah.
Right. So if I may sum up, I think what you are really saying is that you can read the blogs. You find those really good blogs and you read it, and the blog is really to guide you in understanding, how things can be done. But ultimately, you got to decide whether are you going to do it yourself, because not everybody can. Not everybody has the energy. Not everybody likes to do it. If you decide that you can't and you need to go out and get advice, you can use the knowledge that you have gained from all these readings, whether from books or from blog like Investment Moats. And then when you go out there and look for advisors, you are trying to find an advisory firm that is in sync with your beliefs. Right?
Yeah.
The execution might be different, but the general philosophy is the same. And if you decide that you're going to outsource this part of your life to an advisor, I guess you have to be prepared to give up some control.
Yeah.
Right? Because if you are not prepared to give up some control and you want to still hang on to it and do it on your own, you should really do it on your own. Right? But if you decided that there are other things that are more important, I'm prepared to outsource, you got to somehow, there's a trade-off. And that trade-off is you got to give up some control. Right? Otherwise, firstly, you are paying fees for nothing. Secondly, where's the accountability, right? Because if you get an advisor and at the same time you want to meddle with the portfolios, when things go wrong, who really is accountable? Is it your advisor is accountable, or you are accountable because you are meddling with it yourself, right? Yeah. So I think people who wants to find an advisor to do it, after reading all these blogs, this is some mental acceptance that they must have before they go out and get advice.
Yes.
Would I be right to say that?
Correct to say that.
Okay. Thank you very much, Kyith, for the time spent with us. To all of you out there who are listening to this, I hope you have found this to be beneficial. I'm not sure whether this is the first time you have heard Kyith on a podcast, but check out his blog, Investment Moats, but also do check out Providend. We have a treasure trove of good articles, not just written by Kyith. Sometimes Kyith contribute to our treasure trove of articles, but also from the rest of our client advisors. So once again, thank you so much for listening to us. All analyses, views, or opinions from interviews, recommendations, and other information broadcasted, podcasted, or published herein are provided for general information purposes only. Information expressed does not take into account any specific situation, particular needs, or objectives, and should not be construed as specific advice or a recommendation. Information has been obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed. Always consult with a qualified investment, legal, or tax professional before taking any action. Providend Limited does not accept any liability for any loss whatsoever arising from any use of the information broadcasted, podcasted, or published herein. All contents and information contained herein may not be copied or reproduced in whole or in part by any means without prior written consent of Providend Limited.